Hello, today is November the 14th, 2020. Let's do our disclaimer and go over our calls. It's my plan for Monday. If we get smartly in the undesired direction, the call is killed before the open. Don't count on the plan as being correct because I have no assurance it is. Here's my email, mejt.trades@gmail.com. Okay, we look for the pattern with the early low, and typically it's a rally day with a high in the final hour. We got that. And we looked for higher prices, and we got that too. Here's what we said. Unless we gap and promptly undercut Thursday's low, which didn't happen, we should see higher prices. Monday's pattern has the early high, doesn't mean you won't gap down. We get to cross a target off the list, 35.75.14. Note the resistance and support right at the target. We still have a higher target from November 9, 36.27.07. I'm not claiming we're going to drop from right here, but if we are going to drop, I would rather that target not print. If there are no failed targets at a high, it probably isn't a high. We have a new target, most likely to print on Monday, of 35.74.10. And unless we gap up smartly, that's my call for Monday. Here's what MEJT said during the day. It said this rally here was false. We retrace. Said this drop was false. We'll retrace. Now says this rally's false. Started too soon. And we're targeting 35.74.10. Now I've given up on DeMarc's stuff working, but for those who haven't, we now have completed bar 13 of a combo sell signal on the weekly chart, and that goes in alignment with bar 13 of a sequential sell signal on the weekly chart. And I'm not saying it works, but if it works and works well, there should be a big drop immediately. It's not part of his rules, but my experience has been that the longer it takes for these to work, the less effective they are. I'm not going to claim it'll work, but if there's a big drop early, I would expect it to work. Well, here's our main problem, which is this resistance here at this trend line. Until we undercut some of these lows, that resistance is not obliged to hold, but it has been stopping us. The other main fly in the ointment to this huge advance is that the American Association of Individual Investors has a survey, and it shows that the amateurs are now showing extreme levels of confidence in the market. Bullish readings are at levels which in the past have led to big market tops. Doesn't mean we have to drop Monday, but it's a big red flag waving in front of your face. That's been my concern recently. Now we did break under these two old highs, which is a sign of weakness. But you need confirmation. Confirmation is trading under Thursday's close by 1 cent, and that never happened, so that break isn't confirmed. That's good for the bulls. What's not so good for the bulls is that we had this big sell-off. We've now recovered 61.8%. If the bears are going to make something out of this, notice we also stopped right at this trend line. If we're going to get something big to the downside, you really should stop right here. Here's your big move up, your big drop, 61.8% retracement. That's the logical place for this rally to stop, if it's going to stop at all. Now, it is possible to have a wave count which says that we ended right at this week's high, but that's not the only count. There's an alternate count, A, B, C, with Friday's high being in perfect wave balance with the other waves. So if we do drop from here, there's an explanation for it. Now, of course, other counts might work too. Doesn't mean it's the right count. But if there isn't a count that works, it probably isn't the high. And if there is a count that works, you at least have to consider the possibility. If you look at a shorter time frame, it goes like this. Here's 1, 2, 3. When wave 3 is this strong, typically wave 5 truncates, which is how I'm calling this. If that's A and that's B and that's C, you've got good wave balance right here at the high. You've also got a 61.8% retracement right at the high. If the bears are going to make something out of this, if they are, we should drop big and hard right at Monday's open. And if we don't, and if we take out this high, I don't think that's the end of wave 2. And the most likely thing is we're going to go past this high here to new all-time highs. Not required, but I think it's the most likely. Monday's pattern has the early high. You could gap down. We have mixed signals. Here are the rules. It's positive that we rally all day. When this happens on a Friday, almost always carries through into Monday's open. If we don't carry through by going higher Monday's open and gap down smartly instead, that's a very negative sign. It's negative. We have a lower MEJT target. Unless we gap up smartly, I think it'll print. In addition, sentiment indicators from the American Association of Individual Investors are at a level of extreme bullishness. It's typically seen only before a major decline. Doesn't mean the decline has to start Monday. If bears are able to make something, if the bears are going to make something of the reversal from this week's all-time high, would be ideal if we were to gap down smartly Monday. If we're going to make something out of it, if this is one place for the rally to end. But if we continue higher instead, we don't take advantage of the pattern at Friday's close. If we keep going higher, I think there's a very good likelihood we break to a new all-time high before any significant decline happens. The high he reached in futures last weekend, I think it was 36.68 on the futures contract. That's a reasonable minimum target. So I'm going to be paying close attention to what happens at Monday's open. This is a rally until proven otherwise. We keep going higher. I think we keep going higher. But if, and that's an if, we drop smartly instead, this is really all we need to call for a very big drop. So I think Monday's open is going to be critical. It's a pattern with the early high. If there's a big gap down, which I'm not predicting one way or the other, look out below, and that's today's call.